indicate this is a weekly occurrence. It happens every morning, every Wednesday morning at 8:30 a.m., be that standard or daylight time. I wonder if we're ever going to go to one standard time, by the way. But in any case, whatever time zone you're in, it's 8:30 here in Colorado. If you are in California, that would be 7:30. New York State, 10:30. There are other states. Arizona is now on our time zone. They kind of switch back and forth because basically they don't switch the clocks. So what happens there is twice a year, Arizona time. Once a year, Arizona time becomes the same as Colorado. Right now, since we're standard again, it's 8:30 in Arizona. Yay! Now, of course, exactly 24 times 180 days from now, next summer, it would still be 8:30 in Arizona, but here it'll be 9:30. And did I jump on this to talk about time zones? Probably not. Weekly Profit Talk is a weekly question and answer period. And if nobody's on to ask questions, then I just basically riff for a few minutes on all the things that lead to business entrepreneurial prosperity. The three main macro elements to net income is the gross profit, top line earnings, what you make for the thing that you do or the things that you sell, and the next thing down is the cost of making those goods or the labor to do whatever it is you do. That is a category called a cost of goods sold, and that results in another number called gross profit. So after gross profit, you've got what is for most people the longest section, and that is your selling and administrative expenses, or just expenses for short. And at the bottom of that, you have something called net income, and that is your profit. That's the money that you make. That's the money the IRS taxes your business on. So the object of the game, of course, if you are in business for yourself, is to create as much net income for yourself and your family as possible. Net income doesn't always equal cash flow either. So that is another, it's like trying to figure out the balance of the endocrine system in the body versus the circulatory system. It's like they're not the same thing, but they kind of go together, So cash flow and profit are two entirely different things. There is a third statement, which we like to share with all of our clients, even those at the intermediate fractional CFO level. And we call that the statement of cash flows. Excuse me. Everybody calls it that in accounting, in fact. It's critical because it basically tells you exactly what your cash is doing. Cash is basically the oxygen that feeds the hemoglobin of your business. You've got to have cash. That is also the very top thing on a balance sheet, your current assets. So hoping this is a little bit educational, just kind of like I say, riffing on some things that don't really have a topic prepared. But I'm reminded that we are almost midway through the final quarter of the year. The fourth quarter is kind of a big deal because that ends on the year. And I do have something we can talk about for a minute. With about, I think, 7 weeks to go. And hang on, let me look at my calendar. I've got 1, 2, 3, 4. Oh, it's about 8 weeks actually still to the 27th of December, which, by the way, will be the very last weekly profit talk of the year. Yes, we'll be here for it. We do this every single Wednesday, by the way. So let me talk about the thing I just thought of. What was that? Get a quick cup of coffee here. The topic which sprung to mind was should I or should I not spend a bunch of money at the end of the year to get my taxes down? This has come up both in my business and personal life. Comes up in the business life quite a bit. But by the way, before I go any further, if you do have any questions while you're listening, I've got the thing called Chat Overlay. Let me see if that actually works. If you type a question into either LinkedIn, Facebook, or YouTube, we're live on YouTube now. I will see it and I can answer it live. So give it a try. This technique, tactic, thought process of getting near the end of the year and your bottom line financials look like you're going to be paying a lot of tax because you've got a whole bunch of money down there on the net income line. Should you buy some really expensive stuff at the end of the year to get that down? I am going to answer that with a brief summary type answer. Generally, no. And here's why. When you, if you spend money on an overhead in your business, let's say, for example, you've got 3 people in your office and they all need new iPads or tablets or whatever you want to buy them. And let's say you spent $800. I'm sorry, I'm reading Paul Peters' comment here. Hello, Paul, and thanks for joining us. I am, in fact, not in a jail cell or otherwise making an Al Qaeda video here. This is actually straight up friendly advice, free of charge, and we do this every single week. So thanks for joining us. I think that was kind of funny. Where am I? Real quick, let's wrap this up. If you buy 3 iPads at $800 each, that's $2,400, right? Good. Okay, so that $2,400 appears on your profit and loss statement as an expense. It will reduce your gross income by $2,400 in your net income. Now, I think if you, sorry, that's distracting. If you pay $2,400 for those, you are not going to be getting, it's not a tax credit, but it's an expense. So what that means is you're reducing your taxable income by $2,400. Typical family, middle America, let's just use a number of 15% effective tax rate. By the way, if you use tax software, you should be able to find your effective tax rate somewhere on something called a comparison sheet. If you do your tax returns year to year, at the bottom, you'll see a percentage. Effective tax rate is simply taxable income divided into the tax. Okay, and that gives you a percentage. So if you have a 15% tax rate and you spent $2,400, quick, do that math with me. That means that you're saving or getting back 360 of those dollars. So effectively, you're still spending $2,040 of your company's money that you're not going to get back. So I guess the real smart answer to that is, should I buy big expensive things to get my taxable income down? My modified answer is yes, if you need what you're buying. Okay. I would not just spend money willy-nilly, and don't look for dubious expenses that cross over the line of ordinary and necessary. Buying things for your family because one of them worked in your warehouse a couple of weeks ago isn't always necessarily a legitimate business expense either. So that's my answer to that. Let's go ahead and wrap up for the week. I'm going to reach out to my friend Paul Peters here. I'm kind of worried for you too, sir. But in the meantime, everyone, remember that we do this every single week at 8:30 Mountain Time. That is 7:30 on the West Coast, 10:30 on the East Coast. And until next week, have an awesome rest of the week. And if you have a chance, do something randomly kind for a stranger. So until then, so long. And